It is Sunday evening, the 29th of November 2020. I'm having a look at the global indices. So starting with the Dow. So the Dow is kind of testing 30,000 here, and I'd like to see it kind of break through that. So it's not at all overextended on the daily. It has to prove that it can break through that resistance. That is a possibility, but it's not even that overextended on the weekly. I'm okay with that. On the monthly, I don't really think it's ridiculous either. It's an incredibly bullish candle. Not to say we're free and clear, I'm saying that overall that certainly looks more bullish than bearish. Moving on to the S&P 500, same thing. It's got to struggle. It's kind of got to break through this local recent resistance. Does not look ridiculously overextended on the weekly. And the monthly is, I would say, is now starting to enter extreme overextension. So I'm a little concerned about that. I want it obviously to close by the end of the month solidly over the previous highs because there's been some rejection here. So I'd really like to see that, to do that, because that would imply that we, no matter what happens, at least for the next few months after that, that in theory that the markets are actually relatively stable. So even if we had a bit of a correction after that, it would imply that we would recover relatively well from that. So that's what I'm looking for there. The NASDAQ has got to get outside of this orange range that I've put in here. I really need to see it break above that. It's looking really good on the weekly. I'm very happy with it on the weekly. It doesn't look overextended. It looks nice and healthy. If it can break through that, that means the NASDAQ is pretty good. On a monthly basis, the problem I have, of course, is that it's sort of overextended here and it may fail to do that. So one possibility here is that it closes down within the next couple of days, and we close below that, so we then have to deal with that being a fourth kind of candle which failed to kind of ultimately continue onwards past 12,000. So that is something to take into consideration. I do think the NASDAQ's overvalued, where true value is closer to 10,000. But that being said, I really need to see how it gets through this week. Trading is incredibly risky in this area because, of course, it's going to be potentially hitting lower, potentially rejecting off the highs, bouncing off the lows. It's going to be ping-ponging around here. So I'm probably going to stay away from the NASDAQ as an index in terms of intraday trading. I might keep an eye on the Dow and the S&P. But if the NASDAQ does decide to fall and start to break through these lows, and I think I'll keep that level there, and I think I'll just add in another level that I'll be keeping an eye on. If it starts to break through these lows, then I think it's reasonable to expect that the others will start to head lower as well. So again, the NASDAQ will be kind of my windsock just to see how things are going on a daily basis. Looking at the Russell 2000, this is just phenomenal. Such a massively bullish candlestick. It's very difficult on a monthly basis. It's very difficult to believe that the markets are inherently weak if we produce something like this during a kind of so-called economic or global crisis. I find that interesting. We're sailing past the previous highs. The daily looks good. The weekly is definitely now entering overextension, overextended away from the moving averages. The monthly is just crazy. So potentially there might actually be some slowing down. It might have its eye on 1900, then it taps that, and then potentially we get a bit of a retracement back down to 1600. So a little bit cautious of that, but preferring the look of the Russell. It's incredibly bullish, and it actually makes sense. It's small cap. It's small cap businesses, and possibly they're benefiting from any future stimulus we get. We'll have to see how that ultimately unfolds. One thing I think is highly likely is that with the way that we attempt to survive the lockdowns until we have a clear kind of recession in terms of coronavirus, potentially any stimulus that we see might produce growth, and ideally it'll be in the small to medium sized companies rather than the big caps, because the trickle down obviously doesn't work, but small to medium companies would see probably a better effect on their economy. So in terms of entrepreneurs and self-employed as well, so we could see some that, hypothetically that is one of the scenarios where we could see a really nice recovery, but certainly the money mustn't go to the biggest. It's got to go into the mediums and smaller size now. Now looking at the FTSE. FTSE is trying to stay above this, and I'm very happy for it. I'd like to see it do that. It is I'd prefer for it to close above that than to close below that. I really, really would like to see that happen. We have a confirmed uptrend so far, at least, or potentially range bound. It's not sufficiently above that for me to say it's a trend, but we have technically broken the previous high. So technically we are in a uptrend. However, if we do suddenly close back down, we then would potentially be stuck within a range for a while. That would be one of the few that fails to do that. It's looking overall, as I said, these are indecision candles. We could see that it does end up coming below that. So for the FTSE this week, I'll be looking conservatively to see if it does come back down below 6,300, but I hope actually indeed that it manages to push on higher. Then looking at the DAX. The DAX has got its own barrier that it's trying to break through. It still looks pretty good so far, but it has to get a little bit further, or it's going to close as a solid bullish candle. So really, to see that's the case, it is not free of this entire range of strong resistance in the past, so we're not clear yet. The CAC looks amazing. This is an incredible uptrend. We've got high lows, high highs. We so far are past, aside from this one single breakthrough here, we are above previous resistance, historical resistance. That all of that is an incredibly positive sign. I'd like to see it push a little bit higher, close higher if we can. And next week, of course, we'll know whether we close lower. We'll have a new monthly candle. We'll see how that goes. Then look at Euro stocks. Again, beautiful that this has produced that really clear uptrend, solid high lows, high highs, no range bound behavior here. Next target here is 400. So it makes more sense to me that we sort of slightly above weekly resistance, that we would attempt to continue on to 400 this week. And if that is the case, and that's Euro stocks, that implies that the rest of the markets are likely to do that as well, because this is one of the laggers, not one of the leaders. So look at the Nikkei just bursting out of that. I mean, this is just absolutely insane. Now, if you take this bullish breakout candle within the context of this wiffle waffle that has happened going back to 2018, you could see this as a consolidation and this as a breakout, so the consolidation. And therefore, this is incredibly healthy. This is incredibly healthy. This would bode well for the next year or two. So bode that this is consolidated Euro stocks and has broken through. But what it does also say is that there's potentially a lag in terms of from the Asian session side, and there's potential for more growth there. So overall, I'm very excited and optimistic about what this means. I do know we need retracements on the monthly timeframes on quite a few of the indices, but they would be normal, natural, healthy retracements as opposed to kind of a crash, so to speak. So I don't know, but that is something that I like the look of. 27,000 perhaps is within reach, but any pullbacks down to this level would look great if we could have that before, so it could take a bit of a breather. It's obviously now monthly overextended, but this is overall is a very, very good sign. So I guess I'm more curious to see how we close within the next couple of days as a monthly candle, how we capture that, which when I say within the next couple of days, within the next 48 hours, I want to see how that goes. Do we close lower, or do we manage to close right at the edge, which is a great, generally speaking, is a good sign. The ASX in Australia 200, also a confirmed uptrend, very bullish, breaking past previous highs, coming into historical resistance now. Overall, I've got nothing else to say to this other than at some point we'll need a weekly retracement, but my longer term on this is more bullish than bearish. More bullish than bearish. Any daily retracements, bullish candles could be swing trading opportunities to the upside here, as depending on where those next levels of support and resistance are. But at some point also any pullbacks into 6,200 could be buying opportunities for the next leg up. So to kind of wrap up, yes, of course we could have some unforeseen kind of a negative reaction to the markets, but definitely what has become apparent over the month of November is that several markets outside of the US have smashed through their ceilings and gone into uptrends where prior to that single candle they were actually looking as though they were preparing to head lower. And it's conceptually the idea that they were, this sort of implication is that they're more undervalued than anything else, certainly not weak per se. It is, however, as I said, this is not a reflection of the economies. I hope that there would be some trickle-down effect from this, but definitely there is no correlation between this and the bottom 50% or 60 or 70% of the population. So be aware these are two different things. These are good for traders and investors of any particular ilk. You can obviously be an investor at any age, of any income, potentially. But in terms of job growth, in terms of other GDP aspects, it doesn't necessarily have to tie up with that. So I just think it's important to emphasize that. So economists would actually be better off spending their time analyzing how to improve the economy outside of the stocks, because the stocks do not represent, this is not good for the general economy necessarily because it isn't correlated to it. Okay, so that's it. Thank you everyone. Have a fantastic week, and obviously as usual, trade sensibly and carefully. Thank you.